first of all, you are growing the economy. That's a positive. So now the question is, we need to create the quality growth that will create jobs and unemployment. We need to invest to be able to erase our infrastructure deficits. And right now, with the differential rates on international capital markets, it provides us with a very cheap alternative to funding this infrastructure deficit and making it work. So as you've seen from the QE3 by Bernanke, he's going to hold interest rates for at least 2 years over a period of time. And what that means is the fact that if you can go into the market now and get a 5 to 7 year instrument, or even a 10-year bond instrument, then that means that you have cushion to be able to, in the next 10 years, plan your infrastructure development plans and go out to the international capital markets and fund it.
The opportunities that we see, are significant. And we've talked a whole lot about the power sector, and you know what that means. If power problem is solved in Nigeria, you know how that can help you and me. If we solve it, we know agric. We used to be, Nigeria agric was the mainstay, of the Nigerian economy. Then we found oil, and most of the able-bodied people moved away from agriculture. If we go back to agriculture, which the federal government and the central bank is currently driving, then that means we can actually feed ourselves, we can actually empower our people. So reinvesting in agriculture, reinvesting in power, and all that means we are diversifying away from oil, so that we are not just relying on oil as the mainstay of the resource of the country's economy. So if we're able to do that, diversify away from oil, make sure that we go back to agric and that we are able to feed ourselves, not just feed ourselves, even export to other countries. That will be the future of the country.
How do you think we can help? Because the manufacturing sector right now, the GDP's contribution to the GDP is quite low compared to some countries. How do you think we can really boost the sector to
Well, you're correct, and you will see that the central bank had pioneered some funds which are meant to be lent to the manufacturing sectors, particularly also to the SME sector of the manufacturing sector. So I think we need to create a market where the manufacturing sector can tap into long-term resources to finance expansion projects. And we discussed that a lot, at this conference. Today, they basically take short-term monies, to finance long-term projects. That's actually setting themselves up for trouble. But if you have a stock market that is able to cater for their interests, such that they are able to borrow low, and then there are general incentives around their borrowing in the market. We talked about how do we encourage, a whole number of the other large manufacturers that are currently not listed. So we need to create incentives to bring them to the market.
Well, there's been a lot of house cleaning of the financial system in the last 3 years since the crisis. The banking system, there have been a lot of reforms there. Even within the capital market operators and regulators themselves, there's been a lot to strengthen the supervision of stockbroking firms, to strengthen the compliance of listed companies with our rules and regulation. And there's also been a lot of focus in innovation. New products. Today, for instance, we're launching market making on the stock exchange. We've introduced exchange-traded funds. We have plans to introduce a couple more instruments in the next 3 years. We've revamped our listing requirements. And I think the public is gradually beginning to take notice that changes are underway.